so concerned about their farm finances right now, they really just can't catch a break. It's not just because corn prices are below break even for most. It's the fact input prices are so high. In fact, input prices could be even higher this fall. But could the one big beautiful bill provide the help farmers desperately need?
The market working in ideas of record U.S. corn yields, which could push ending stocks back over 2 billion bushels. Plus, Brazil's corn crop also looks like a record.
It didn't start with a bang. It started with a whisper. A few canceled orders here, a quiet change in buyer preferences there. Then came the silence. No new contracts. No fresh shipments. And by the time farmers in America's heartland noticed, the damage was already done. For decades, the United States was the king of the global corn trade, sending billions of dollars worth of grain to Asia, Europe, and beyond. Corn wasn't just a crop. It was a ticket to prosperity for rural America. But in just a few short years, that crown has slipped. What was once the engine of Midwest wealth is now stalling, and the gears aren't turning back. Behind the scenes, a competitor was quietly making moves, building alliances, pouring money into new farming technology, and setting a brand new standard for the world's agricultural trade. And here's the twist. We'll reveal who that is later in the video. Before we go deeper, smash that like button. It tells YouTube this story matters. Across Iowa, Nebraska, and Illinois, the signs of trouble are everywhere. Combines that once roared through golden fields now sit still, collecting dust in driveways. The reason? Price. The average market value of corn has sunk to around $3.50 per bushel, the lowest since 2016. For many farmers, that doesn't even cover production costs. This isn't just a bad season. This is a breaking point. Over 2 million tons of corn have been rerouted from export to storage, with piles sitting at terminals in New Orleans. Contracts worth millions have fallen apart. Farmers are left with mountains of unsold grain and an avalanche of debt. And the ripple effect? It's hitting hard. Farm supply businesses are losing customers. Local diners are serving fewer lunches. Banks in small towns are quietly tightening loans. Before we reveal the competitor threatening America's corn crown, hit that subscribe button. It keeps you in the loop. Because what's happening in America's cornfields isn't just an agricultural problem. It's a warning. And the way this plays out could change the future of farming and the economy for good. In states like Indiana, where farming props up entire towns, the corn crash is setting off a domino effect. Every canceled contract, every bushel returned means lost revenue, disappearing jobs, and once busy main streets going quiet. For decades, trade deals and buyer loyalty had protected America's corn belt from major disruption. But now, a perfect storm has hit. Foreign tariffs, rising transport costs, shifting consumer tastes, and outdated certification systems. Any one of these problems could be managed. Together, they're a tidal wave reshaping the global grain game. The first real sign of trouble didn't come from Washington. It came from Ottawa. While U.S. farmers wrestled with uncertainty, Canada was busy building something new, a system promising total transparency, environmental accountability, and full traceability from seed to port. They called it Prairie Trace, a blockchain-powered grain registry that quickly caught the eye of overseas buyers. Every shipment came with a digital passport, non-GMO verification, carbon footprint data, and a complete chain of custody for every grain lot. This wasn't just paperwork. It was exactly the kind of proof regulators in the EU, Japan, and South Korea had been waiting for. While U.S. exporters focused on pumping out volume, Canadian negotiators were locking in high-value contracts. In Tokyo and Seoul, Canadian co-ops signed multi-year deals by offering what the market now demands: clean, green, and fully traceable supply. The payoff was immediate. Within weeks, Japan shifted a big chunk of its corn imports from U.S. suppliers to certified Canadian producers. South Korea followed, pointing to lower risks and smoother compliance with their own laws. These deals didn't grab headlines right away. But economists now say they mark the start of a new era, one where whoever controls trust and traceability controls the trade. Economists call it a structural realignment in the global grain market. Farmers call it something else, a nightmare. The numbers tell the story. Spot corn prices in the U.S. Midwest have slid to $3.45 per bushel, the lowest in almost 10 years. Meanwhile, Canadian corn from Manitoba is selling for $4.20, nearly a 22% premium.
Why?
That extra money buys something U.S. grain can't always deliver: environmental certification, non-GMO proof, and a digital chain of custody. For big buyers facing strict import laws, the math is easy. Even if Canadian corn costs more on paper, it comes with fewer headaches, faster customs clearance, smoother compliance, and zero risk of bad headlines. In the high-stakes world of commodity trading, that's worth as much as the grain itself. But prices aren't the only problem for U.S. exporters. Logistics are piling on the pain. Early in 2025, the White House approved steep hikes in inspection and certification fees. At the same time, shipping costs on Chinese-built vessels moving through the Gulf of Mexico jumped 25%, adding nearly $900 million a year to U.S. export expenses. Then, in March, the Federal Grain Inspection Service raised its export testing fees by almost 40%, from $57 to $81 per sample. That's money farmers and co-ops have to eat, shrinking already razor-thin margins. While the U.S. wrestled with these cost spikes, Canada was busy scoring wins. In early spring, a low-key signing ceremony in Seoul barely made a blip in North American headlines. But it should have. South Korea's largest feed mill group inked a 5-year supply deal with an Ontario-based agricultural network, choosing Canadian corn over American to meet demand for non-GMO, low-emissions feed grain. It didn't stop there. In just 8 weeks, similar contracts popped up in Japan, Taiwan, and even parts of the EU. These buyers weren't just purchasing grain. They were buying trust. And in today's market, trust is as valuable as the harvest itself, maybe even more. It wasn't just corn buyers looking at price anymore, it was trust, traceability, and transparency. By mid-year, trade analysts were openly talking about a trust gap in the global corn market. This gap had nothing to do with crop size or yield. It was about compliance, documentation, and predictability. Canadian grain, backed by advanced tracking tech and a centralized inspection system, gave buyers rock-solid confidence their shipments would sail through customs. The U.S.? Still using a patchwork of outdated software, scattered inspection protocols, and inconsistent pesticide checks. For overseas buyers who have to meet their own government's strict rules, that inconsistency wasn't just annoying, it was a financial risk they couldn't afford. Then, regulations started closing in. In February 2025, Mexico formally banned genetically modified corn for human consumption. Within weeks, major feed processors in Japan and parts of Europe added similar restrictions to their contracts. That instantly put most U.S. corn out of the running. Over 92% of American corn acreage is GMO. Canada, meanwhile, had spent years investing in non-GMO seed programs and airtight certification. When the rules shifted, they were already in position. For global buyers, the math became simple. Secure supply from Canada or risk delays, rejections, and expensive fines importing from the U.S. The contrast on the ground was stark. In the Midwest, U.S. farmers watched prices collapse and markets vanish. In Manitoba and Saskatchewan, corn prices stayed above $4 per bushel, boosted by low-carbon premiums and hassle-free export procedures. Some overseas buyers even paid a 20% markup for grain carrying full prairie trace certification, proof of origin, non-GMO status, and environmental compliance in one scan. Perception had flipped. U.S. corn was now viewed as a gamble, a product that might fail inspection or trigger environmental violations. Canadian corn was seen as safe, compliant, and ready for the future. And in the world of global grain trade, perception isn't just reality, it's profit.